kid, I watched Jam with some old-time blues folks at a bar last night. No, not School of Rock. He's
No?
no, he's a friend of ours. It's at Fish House, Joe. In Kenny.
Can't hear you.
Testing. Can you hear me, Joe?
Can't hear you.
Shaun's with us. Shaun, can you hear me?
I can hear you, man. Yep.
Awesome. We're just doing a little musical interlude before we start the show.
Liking the sound of this.
16-year-old got up on
Hold on a
stage with
second.
a blues band.
Hold on a second.
Fish House last night where I was.
Hey, Brad, here. Brad. There's for you. Did you get it? Here. Need a lighter.
The kid's friggin' amazing. Anyway, just thought I'd do that while we were waiting. Shaun, how are you, sir?
I'm not too bad, guys. Sorry about yesterday. Yeah,
No
everybody
sweat.
in this country seems to be dying.
That's horrible, man.
Yeah. Your kid's okay, though, right?
Oh, he's grand. Yeah. Little shit.
Good.
Good. Yeah, Shizzy said NBC can't shut that clip down. Yeah, let's hope not. Somebody who wrote the song will probably come along with the algorithm and stop us. Who knows? But that kid was great, dude. Joe, last night we went to there's a seafood restaurant in Kendall called the Fish House, and I didn't know it. We go there to eat all the time, but every Wednesday and Thursday they have Wednesday night is jazz night, Thursday night is blues night. And they let people come up and play with them. And this is a friend of our son who's 16, who's been playing since he was like 6. So that was
Super cool, man.
Yeah, it was awesome. Great show. So
The Fish House, you said it was? Okay.
Fish House, yeah, awesome food too, by the way, really good food. Anyway, Shaun, what's going on, buddy?
Oh, not a lot, guys. Not a lot. Just kind of usual stuff. Hoping for the market to actually do something interesting, which it doesn't appear willing to do at the moment. So still just chopping away. God, the volume's awful. Nothing to like literally, January chop for the moment. Anyway, so I've been writing a few algos and trying to keep myself out of too much trouble.
Well, I know that's not an easy thing for you to do, so I'm glad to hear you're making that effort.
Although I don't know, Ed listens to the show. I want to thank him. He got me a Dublin Bitcoin hoodie.
I saw. Was that clip the other day? That
was to Ed and a mate of mine, Colin, and it was brilliant. I mean, he's significantly underestimated my general girth, but other than that. Thanks.
Yeah, you got to get those reverse tapered hoodies, so it kind of spreads out a little bit at the bottom.
I'm going to stop drinking Guinness, and that's clearly not good.
We didn't get to see a picture with you wearing it.
No, I don't. There's enough pictures of me on the internet. There we go. It's Ed to the right with the pints. Thanks, Ed. Hardcore Bitcoiner, by the way.
Nice.
And Colin is a guy who used to work with me in the mines, so down the mines, down the Bitcoin mines. So
nice.
Good. There you go.
I like that shirt. That's pretty awesome.
I think he designed it himself. He made the bee a Bitcoin bee. Yeah. Very happy with it. I just have to go on a diet now.
Joe, I think we'll just have to go out there to pick up a shirt, if nothing else.
Guys, you have to come to McDade's. Like, come on, if it's good enough for Hillary, it's good enough for you guys.
No, any place serving Guinness in the old country is good enough for me.
Absolutely. Absolutely.
There's a selection. There's a selection.
Oh, cool.
That's awesome. So, Shaun, today we have, you said you wanted to talk about cycles and longer term trading.
Yeah, like one of the things we discussed for anybody who's interested in kind of, a view of how to play the market was, have I got the wrong screen sharing? I think I do. Oh, hang on, let me just see. So I've got so many fucking screens. Excuse my language. So many screens. It's difficult to know what's going on.
Have you not listened to this show that you're actually saying, excuse my language?
Fuck that.
Yeah, it's fucking cool, dude. Don't worry about it, man. It's fucking good.
So I think for anybody who's kind of interested in trading, that some of the best things that you can do are really to trade multiple time frames. Yeah. Right. So if I kind of look at it, and you can pick a selection, but I think trading one time frame is a bit of a mistake. But I do cycle length trades or half cycle lengths. So you consider a cycle, a bull cycle, and a bear cycle. I'll open a trade at the beginning of a bull cycle, close it at near the top if I'm lucky, and then right at the opposite direction. So they're kind of maximum long time frames, and I don't touch them. I'll do kind of some swing trades, which could be a week or a month. I do some manual scalping every swap, in which again, I'd be fairly active, but a couple of hours, probably maximum 2 days, and then high frequency stuff, which is all algo. But right. the thing is, when you trade in these different time frames, you can begin to look at your portfolio in what I call positional terms. So for example, I kind of flip long Bitcoin down around, actually I was very lucky, I caught the Pico bottom on that. Okay, now I let that trade ride pretty much all the way up to here, again, blind luck. But because I have such a, so effectively net long for a year and a half, whatever length of time that was. But that gives me lots of flexibility then when it comes to trading different time frames. So, for example, if I'm 100 units long here, okay, I can start to, rather than take profit here, I can start to create shorter time frame counter trades, so shorts, yeah. So, for example, I would have been shorting all the way along here. So, when you look at trading in different time frames in terms of positional trading, if you've managed to catch a top or a bottom of a cycle, it opens up a huge potential to be able to trade against that position for smaller moves, okay, without closing the position.
Right.
So, for example, if you can catch a move like this, wherever you catch it from, and you're 100 units, you can take 25 short here and not get into this game of constantly opening and closing longer term trades.
Right.
Okay. Because even if you called it wrong, let's say that you shorted here, yeah, you called it wrong, still net you're way positive, yeah.
Right.
So if I'm 25 short here, I'm 100 long here. Basically, it's and I get caught, and my short here is still is wrong and it's still running. I won't close that because effectively it's a form of take profit without profit, because without having the closed positions. Since I'm long 100 here, short 25 here, from here on in I'm net 75. Okay, with that 75 still in profit. So again, a lot of kind of, I hate to use the word professional, but maybe full-time might be a better way of expressing it. Traders will trade an asset long and short on completely different time frames. Okay. And it's incredible the amount of flexibility that gives you. Okay, so if you can catch a down move, a significant year and a half long trade, you can effectively trade against that risk-free.
Nice.
Okay, so you're never getting yourself into a position of, but because what I find a lot of new traders will do is that they play the compounding game. Yeah. So, if you're lucky enough to kind of catch a long here and then it pulls back, you're closing it and then you're compounding it or you're adding to it. But what you're actually doing is, if this is your average entry, you're dragging your average entry all the way up, and it looks like you're printing a load of profit until you get it wrong, and then you just get completely fucked.
Right, because you're pounding in. So because you're stacking onto the size of the trade, you're making the trade much bigger, and then when those losses hit, it's taking a much bigger chunk of what you had. Whereas if you're shorting against it on different time frames, you still have the gains that you had over the long term because you maintained that trade, and you can maybe catch some of those shorts and make money on those down.
Yeah, and so what I'd recommend to anybody who, obviously this only applies to Bitcoin or something, will still be here in 10 years. I'm joking. Actually, I'm not fucking joking.
You're not joking.
No, you're not joking, and you're probably right.
I actually, one of the conversations in the pub the other night, I was kind of going, which asset's still going to be here in 10 years? This is a good question to ask yourself. And which asset's still going to be here in 100 years?
Hey, Shaun, quick question, buddy. When you're, for me and the listeners, when you're putting those shorts on as the price is going up, how far above the current price are you setting those? Are you like 10% above? Are you right on the price? Or are you 40% above? Like, where are you positioning the shorts, I guess, strike price?
I'll just be doing very sledgehammer technical trading. Yeah. So I go, look, I will put this all the way on significant levels of resistance. And again, there was a lot of people who tried to short it here and got walloped, as did I. But the point is, because my short is always significantly smaller than my long, okay, I can let that run and not sweat about it, because I'm looking at a net position rather than each individual trade.
Right.
Yeah. I'm long Bitcoin from there. I'm up 10x. I've got a short from there. I'm down 1x, but I'm down 1x of 25% of the long. Okay. So I don't need to close it. And what I can do is then just constantly add. And again, everybody talks, one of the things I would say is, as we approach the bottom, hopefully, in the market, and is how do you, a lot of people will try just to, do a trade or do 4 trades and just say, look, I want to get in. Yeah. And fundamentally, in my opinion, there's only 2 types of bottoms. And the type of bottom how do you catch something like this? This is a classic accumulation bottom. Yeah. Okay. Went down, reflexive, but basically we stuck in range for, before the actual breakout, which is very, the funny thing is breakouts are very clear in hindsight. These are weekly candles. Yeah.
Right.
So we were there for, 5-6 months. This is classic accumulation, with all the inherent chop. A lot of people would see this as a V recovery. It wasn't. It's a reflective bounce off support. Everybody got fucked, but when it broke out, it broke a technical level and went up. Anyway, it's kind of a classic UW, but mostly it's an accumulation bottom. There's lots and lots of time. Okay, if you can keep your mind straight about it, and this is a V bottom. Yeah, the COVID crash. Yeah, where basically, in 2 weeks you missed it. Okay. What I would say about when we come to this bottom, it's going to be this or this. Yeah. I never said 3K, Shizzy. I'm unpopular enough as a bear without that shit, dude.
Maybe that's a personal question.
I'm happy with 3K, but not. I'll come to the DCA, Roberto. So I'm not a fan of DCAing on long-term trades. Let's assume for the minute Bitcoin bottoms like this every time, actually. Every Bitcoin bottom is like, there's no real V's in it until COVID, where you can clearly see huge, it just went down, plunged too deep, and it just went down. But virtually all bottoms in Bitcoin are, and crypto in general, are these kind of accumulation bottoms. Yeah. You can argue maybe not back here, but Jesus, that's a lifetime ago. If you recognize that, and if you say, look, this is a 3 to 6 month process and you're going to get chopped, and if we don't get this, then I have a simple recommendation, which is if you wanted to invest $1,000 into a coin, yeah, okay, ignore the price and buy $10 a day. Buy it over 100 days, okay? This is, a TWAP type of trade, with time weighted. What you achieve there is a time weighted average price, okay? So rather than playing the DCA game, yeah, because without a V, you're going to get this kind of chop that makes it, when we do bottom, I don't think we bottom, we'll come back to that. You're going to get this kind of chop where all of a sudden, because it's pumping, you're going to start piling in and then you get screwed. It's the way markets work. Markets are there, to take your money. Whereas if you just closed your eyes and went, look, I have $1,000 to spend on this particular asset, okay? Since we haven't had a black swan, and I'll come back to how to identify a V. A V and a black swan are identical, yeah? Okay. Right. Even these types of, so if there's no black swan, there's going to be no V, and we're going to have accumulation. Again, none of this is financial advice, okay? Just opinions. And so give yourself 100 days, okay? And just buy it every day. Don't look at the fucking price even, yeah? And what you will do is you will end up developing a price in the middle of this range, which, trust me, if you can get an average entry price, okay, somewhere in the middle of a range like this, you're going to print a fucking fortune. Again, in a cycle long trade, yes?
Right.
Okay. And I would also say you do exactly the same as the FOMO gets too much. Yeah. Scale out, at this stage, your $1,000 is $5,000. Yeah. So you take out, 50 bucks a day for 100 days. Okay. And what you manage to do here is you take the meat in the sandwich with minimal risk, minimal FOMO, minimal FUD. Yeah. And
makes sense.
And once you establish a position, okay, then you can play your kind of fast scalper games if that's your thing, or your swing trades against that, or even with it if that's your gig. I wouldn't recommend with it, because if you can do that, you will find that over the course, and again, if you look at, you would have got out here if you played this game, yeah?
Right.
Because that was actually the top. And you want to know, you would have done really fucking well. Yeah. There's way more time in this game than people think. People seem to think that, they need to do instantaneous reactions to things. Yeah.
Right.
And yeah, if you're trading, but the risk-free money, as risk-free as it gets, is obvious. And again, it looks easy, getting in at the bottom and getting in at the top, but you will begin to see signs of accumulation. You will begin to see signs of distribution. And it happens over a much longer period than people's minds think it does. Yeah. So like, I the best trade I ever did was I went fuck ton short here on this. It's best because it was my first proper trade, I should say, back in 2018. And I can clearly remember that crash happening in a day. Yeah. 100%. As clear as I can tell you the day. Okay. I can tell you the hotel I arrived in, and being in the hotel and being on my laptop and going, I'm a fucking trading genius. It actually took 1, 2, 3, 4, 5, 6 weeks.
It's incredible.
Yeah. So the moves are never as fast as they feel they are. Yeah.
Yeah. It always takes much longer. And
if you ask me, honestly, if I didn't look at this, I would tell you that all happened in one day.
That's crazy. Yeah.
And it didn't. It happened in well over a month and a half.
And the other advantage to this strategy is this is a 24-hour, 7-day-a-week market, and it's painfully stressful when you're trying to time this shit.
It's stressful if you let it be stressful.
Yeah, of course. But I mean, people trying to judge and time it is, in shorter time frames is much more painful to do, or at least lack of sleep is more painful.
In any market, though, yeah, short-term timing just doesn't work. But Shaun, I just love that swapping exit that you mentioned. I mean, I have never thought of it that way before, of exiting like $50 a day for 100 days. Because I'm one of those guys just sitting there going, all right, I'm up 8, 12x. Maybe it's time to move on. And when I make the decision to move on, I'm pretty much taking out 75 to 85% of it, and then letting the rest just sit as gravy. But, I like this strategy better because it takes all the emotion and you don't have to make a decision other than let's start swapping out over 100 days. You don't have to go like, I missed it. Yeah.
That's exactly it. And even if you took a longer period and something like this happens, then it's okay as well, because your entry price is good and there's still, you could still be TWAPing it out here. But the fundamental point I'm going, look, if you want to place long cycle trades, which I think there's an unbelievable benefit in, because it gives you a position to trade against. And you can, believe me, you can really print a lot of money by trading at higher frequencies. But if you're trading against somewhere where there's literally no way you can lose, okay, it takes the emotions out of it.
Mm-hmm.
Yeah.
Makes sense.
Worst case, you're losing temporarily, probably a little bit of profit. You're down a bit. But again, as we come towards the end of this kind of bear cycle, hopefully, then I think, if it's a V shape, and you'll know it's a V shape because there'll have to be some significant news. Yeah. Right. Then I go, look, do your 25, 50, 100, whatever, catch it. Yeah. But these are incredibly rare. Yeah. The thing, none of this is substantive. This is the normal bottoming process. It happens when the market is basically bored, and so on. And you could even argue, like, if and I'm, again, not as just, if you thought 13.8 is the bottom, which it could be, I think it may be lower, you could even just start this now. Yeah. Mm-hmm. Or I think the bottom's in 3 months or 6 months or whatever. Yeah. Just take that time frame and start. And what you will do is you'll generate an average, this time-weighted average entry, okay, that removes the stress and removes everything about it. And then when you have that position, okay, you're now in a position to, again, this is what I do. You can play the game in other ways, but the classic game of, and again, from the traders I've seen over the years, which is take it, re-enter, take it, re-enter. It always ends with basically, it's in trader terminology, they say the market's very good at loaning you money. And what happens during this period, the market is loaning you money, and it always gets it back with interest, because you're compounding 100K laser eyes, whatever, the flippening, whatever the fucking narrative is. Okay, up here is that one time where your emotions are going, no, this is really going now. I've been a superstar for the past 12 months. I've just been printing money like a fucking legend. Okay, and then the market goes, okay, thanks, I'll have it all back.
Yeah, absolutely. Shaun, I think one of the things that's probably most difficult is identifying these ranges, right? Like if you wanted to invest in that in the bottom for those 100 days, knowing when you've kind of hit that cycle. Now you kind of touched on that a moment ago, but I'm wondering what kind of things are you using primarily technical analysis for this? Are you just saying, hey, look, the volume's down, the volatility's down, people are bored? So
there's some really simple ways to do it. Whenever you're trading, zoom out, yeah? Look at monthly candles, look at weekly candles, and only then go into your lower time frames, yeah? Because another big mistake I see people make is they think 4-hour candles are high time frame candles. They're not. Weeklies when you're looking at an asset, and always look at a chart, don't look at percentage changes, because when you're in shop, up 10%, down 10%, up 10%, it's meaningless.
Yeah.
With a chart, you can give it some context. But I would say that this is completely fucking obvious. Because seriously, because what you've clearly done here is you've lost momentum for an extended period of time. What you've clearly done here is you've lost momentum. Okay, COVID, black swan, take out black swans. Okay, there's such a loss of momentum that on higher time frames, it's effectively self-evident. When we're strongly trending, okay, you don't get these losses of momentum. Okay, this is not a loss of momentum. I mean, the market is still active. It's still here. Basically, the market has just gone flatline for months on end.
Right.
Okay. Now, you can argue this can develop into this. I'm not saying this isn't the bottom, but it's certainly not indicative of the bottom at the moment. There's lots of other factors I would throw into it as well. But I would primarily look at momentum. I'm going to shill Brad, your other company, Material Indicators.
Please
and
do.
I'm going to say again, if you, I better take this off because I have to log in. I don't want to give out my login. Okay, so if you take a tool like this, which is order flow, so I'll try. Oh, no, sorry, man, I need to. It's my fault. I'm requesting too much data.
Those green wallets are moving, man. Oh, they were. Sorry.
Again, time frame counts here. So for those of you who don't use this tool, I would strongly recommend it. It breaks up orders by size. Okay, so you can see what the big guys are doing and what the little guys are doing. Okay, so it tracks them and then it spreads them out. So you can look at this pump and it's fairly clear it's being driven by pretty large stats. But that's on my point. If you zoom out, okay, and I'm going to remove all the small order classes, okay, and I would say that you can see that this was the effective top of the market here, okay, because these guys just got out, and they've just been selling the market ever since, okay.
Yep.
For there to be accumulation, we will see some kind of uptick before price takes off. Because the smart guys, okay, will begin to start buying into the market during that accumulation period, okay? And do you know what evidence we see of it? Absolutely fucking zero.
Right, absolutely.
So again, tools like this, looking at order flow and also thinking of the market. And I mean, if you're if you look at the market, there's really two things that when you look at participants, think about participants in the market. And what I would say by that is smart traders, professional traders, full-time traders, whatever word I'm going to use, okay, tend to think of the market as having three types of players, informed money, uninformed money, and market makers who are just who are just filling a spread. So if you ignore market makers, what you're really trying to do is identify what the informed money is doing in the market. Okay. And so, Jesus, Ed, I'm a big lad, you know that. Thanks for the pints the other night, mate.
That's great. Welcome to the show, Ed.
Yeah, welcome, buddy.
We love that.
So whatever way you do it, some people can use it via Wyckoff distribution analysis. The way material indicators do it is by looking at different size of orders, and a whale can pretend to be a shrimp, but a shrimp can't pretend to be a whale. So if you see the whales beginning to tick up, something's up, and looking at the order book. But mostly it's just loss of momentum. But what, to me, and if you combine all three of these kind of things, technical, momentum, and order flow, you're going to get pretty damn close to the bottom. Yeah, close enough. Again, remember, we're talking about holding a trade here over a year and a half, okay, that we can leverage to print a whole load of money. How did I know it was the bottom the last cycle? That was easy. That was COVID, man. That was just absolutely clear that the reflect again, technically, the moment that we didn't technically break, i.e. close a full week below the 200 MA, it was Rocket Moon Lambo. Yeah. Okay. We bottomed here because of the 200 weekly. This time is different. We've lost it, but that's okay. But fundamentally, loss of momentum is where you begin to get interested. And if you're TWAPing, and even if you're not convinced, what you can do is spread it over 200 days. Yeah.
Right.
Okay. This doesn't happen as fast as it feels like it happens in, out in CT where, it's, the God candle and all of this stuff. Yeah, that's all bullshit because we're trading over significantly large time frames. And that's what I'd say. The DCA model is fine for shorter time frame trades, for swing trades, or for scalps. I think the TWAP model for positional trading, because you can just go through the chart yourself and see you've got all the fucking time in the world. Yeah. Literally, don't FOMO it. Build something for the longer time frame, and instead of 325%, do 101%.
Right.
Yeah, because you will catch a far better entry in these types of loss of momentum scenarios. Yeah, and you don't have to FOMO into it. And again, I would say to people, split your stack. Yeah. So if you're going, look, I'm going to have, $5,000 for 5 different coins for or whatever it is that are term trades. Yeah. These are, I'm trading these for the cycle. Yeah. This is my, if it's Bitcoin 10X, if it's Ethereum minus 2X, whatever. Solana plus 100X. I don't know, whatever the fuck. Yeah. but the point is that you're holding them and you're building them slowly and you enter and exit slowly. That is literally, by the way, what accumulation and distribution is.
Right.
Okay? Accumulation is a TWAP. It's a period of time where the big money is getting in slowly so as not to cause the price to rise. And distribution is where the big money's leaving slowly in such a way as not to cause the price to drop.
Right.
These fuckers know what they're doing.
Yeah.
Why not copy them? Yeah.
Yeah. That makes total sense, man. That's beautiful.
Yeah. And again, I think these things are a lot more obvious than people think they are. I mean, it does, even missing a few points doesn't really make any difference if you can get the basic cycle right. Yeah. And again, you just look for loss of momentum, loss of interest in the market.
Do you feel like breaking the 200 that you're kind of in a new game this time around, or do you feel like
it was kind of predictable this time around? Because again, most people hate Elliott waves, but Bitcoin since its inception has been completely compliant with Elliott waves. This is the first wave move that allowed us to technically lose this top on the 200. Yeah. Right. We're also coming in, by the way, into a 200 death cross. So, is this the bottom? I've two views. I'm still pretty firmly of the view that we're gonna bottom end of this quarter, early next quarter. I can see a case where it could be September of next year.
Wow.
There is a possibility for that, but my kind of preferred option is still there. I'm still looking in the kind of 10 to 12K. But even if I decided to, and I'm not suggesting people do, even if you decided to start, doing 150-day TWAP now, I think you'd be okay.
Nice.
Yeah. So again, it's this way of thinking about it that again, this is what the big boys do. Yeah, they do this. We're not doing it like this because our stacks are going to cause the market to pump or dump. Yeah, but we're doing it because the model is actually a very good model. Right. You know, this model of just slowly chipping away at it, and then when you're getting out again for this trade, slowly, you know, accumulate yourself and distribute yourself, even if you're only trading $1,000 or $100 or whatever the number is. Yeah. And keep your head in, and then start to look for, you know, turning points like loss of, you know, again, like loss of momentum and so on. Yeah.
Well, it certainly seems like those strategies, you know, number one, give you a better chance at maximizing rather than trying to time, and also gives you better peace of mind from that perspective. And
yeah, I mean, your timing here can be 3 to 6 months. Yeah.
Yeah.
Which again, I know everybody wants to be a billionaire tomorrow. Yeah.
Yeah, of course.
But you know, and I'm talking about specific, you know, again, the year, 2 year long trades here. Yeah. Right. Where you're, you know, you're looking to get, if you believe, you know, that Solana is going to run back up to, you know, $500 or whatever the hell. Yeah. Well, you know, $13, $12, whatever, even if it goes down to $3, you're going to get a very good entry over the next 150 days. Yeah.
Yep.
You know, time weighted average entry.
That's awesome. Go ahead, Joe.
No, I was just going to say, one thing I noticed, Shaun, with that strategy of like the 150 day, even if you look at, it's almost like if it touches or gets close to the 200-day moving average, you can start initiating it within some percentage of that number. Because even if it, like you look at the black swan with COVID, even if you started buying in there, you know, you didn't miss much if it drops down another. Yeah.
That's the other thing. You know, again, for cycle length trades. Yeah. But because again, there's a percentage game here. Yeah. If we go up, you know, 50%, we're at, you know, 20,000 and something. Yeah. But the difference between 200,000 and 20,000 and 200,000 and 16,000 is not that great.
Yeah.
Right.
Yeah.
Exactly.
So again, it's this mentality of you know, thinking of your entries relative and how you enter relative to the time frame of the trade. Yeah, sure. If you're doing an hour-long trade, you shouldn't be DWAPing. It makes no sense. Yeah,
right. Of course,
you should be doing some fairly aggressive DCAing. But if you're looking at a cycle-long trade, which are, again, in my opinion, some of the safest trades or really semi-investments, yeah, then scaling in and out over periods of months is going to give you, in my opinion, one of a very decent part of a position you can then play with. Yeah.
Yeah.
So let's say you did this with, you know, with Bitcoin, you know, when we get down to 13 or whenever, if you started today, it doesn't really matter. Yeah. It actually doesn't matter, by the way, because I would say to you, if you started today, do it over 150 days. And if you start, you know, as we get nearer to the bottom and you do it over, you know, 100 days, I don't actually think there'd be a lot of difference between your entry prices at the end of it.
Right. Makes sense. Niblet says, I'd rather avoid seeing Shaun's bottom.
Dude, very few people have had that privilege. Not sure if Ed saw it in the other day in McDade's, but that's a bit of a blur.
This is fantastic, man. That's great.
Again, start with all of this stuff. Zoom out. You know, if you're doing an hour-long trade, yeah, start with the 4-hour charts. Yeah, but if you're, you know, always have a contextualize it. Again, they're not that. If this is the bottom range, we're going to do something like this or this. Yeah, we have not had enough time, and we've no evidence whatsoever of accumulation. Yeah, none. Like there's literally no physical evidence of accumulation.
Nothing's happening.
Nothing's happening.
Let's talk about the timing and sizing of the shorts that you're doing on the way up.
Okay, so so I'm kind of lucky. I'm kind of long from down here somewhere. Okay,
right.
Nothing to lose.
Damn. Life is easy.
But here's my point, yeah. I mean, it doesn't matter. If you look at that and I go, it's just a trend, I could just as easily have sold and rebought, sold, rebought. I'd be bankrupt now. Yeah. Okay. I felt that, I do believe this bottom may be a generational bottom. In other words, this may be one of those that you actually don't want to scale out of, you want to trade against. Because to explain my opinion on that, oh, my bloody charts, is that if you look at this as an Elliott wave structure, an Elliott wave structure is very simple. It's a 1, 2, 3, 4, 5, ABC, and then the whole thing starts again. And the reason that this time is different, macroeconomics aside, is that this time is the first time we've ever gone below a previous high, which again is allowable. But what Elliott waves would say is that when we bottom here, that should be the bottom for another decade.
Wow. All right.
So again, with Bitcoin, okay, to be absolutely clear, I would not, and again, this is not anti anything, because again, one of the great myths of altcoins that people forget, because they're looking at their own dollar value, they don't realize that I believe there's only 1 or 2 altcoins that have ever done better in their second cycle relative to Bitcoin. Okay. Wow. And again, if you, I mean, it's quite easy to say, I mean, if we bring up even S, yeah, your beloved S, okay, and we compare.
Don't forget Brad's favorite is Hex. Don't forget about that.
Yeah, there you go.
So if you look at the all-time high before for the last cycle, it was up here. This cycle, it didn't do it, Jess.
Right.
So this is relative to Bitcoin. Okay. Right. You can look at, I don't know, pick Litecoin. Yeah. Almost every time. So again, ever decreasing all-time highs. Yeah.
Right.
Relative to Bitcoin. Okay.
Right.
You can look at my beloved XMR, who I heard Joe talking about the other day. I still have my stack of it. Again, all-time high. It's always lower.
Right.
So nothing anti-shitcoin about it, but history says that the next big winners in the shitcoin casino are nothing that existed in the last cycle.
Right.
Yeah, again, that's just the that's just it.
That's just what historical.
Considering how many tens of thousands there are, I think there were only 1 or 2 that performed better in the next cycle. Okay. Relative to Bitcoin. Now, if you're looking at it in dollars, it will print higher in dollars, but it won't appreciate as much relative to the gold standard, which is Bitcoin, i.e., you would have been better with Bitcoin.
Right.
Yeah.
Right.
So again, that's not anti-shitcoin. It's nothing. I'm just going. If you're picking your favorite altcoin from the last cycle, or you're holding your bags, and history will say that it's not going to run as high this cycle relative to Bitcoin.
Right.
And that's history. And maybe there's real reasons for that, and we could probably disagree on them. But what we have had is every cycle, it's been some new coin, okay, that didn't exist in the previous cycle that actually ran the hardest.
Yeah.
So, when you were doing your 10 top picks for next year, I would look for coins in which there's nothing to the left of the chart.
That's a good point.
Yeah. So I think, I don't know, Cantos I was looking at looks kind of curious to me. Again, not advice, but there's not a lot to the left of the chart to impede it. Right. That's another thing I would say to be a little bit careful of when you're considering cycle length trades, is that's the history. This time can be different, but this time would be different if your favorite coin from the last cycle exceeds its all-time high relative to Bitcoin.
Right.
And so again, just something to consider. And I'll do exactly the same thing with shitcoins, by the way. When I think the bottom's in, I'll be off, looking at, easy trades. I mean, for me, I'm no fan of Solana any more than I am of Ethereum. To me, they're the same thing. Yeah. Okay. But for me, $3 to 30, it's just an automatic 10x. Yeah.
Right.
So I'll just be accumulating in and around the kind of $3 to $5. And I already have orders to get the fuck out of it at $30. Yeah. Even though I think it will probably run to 100, 150. I don't think it'll exceed last, but it's just an easy trade. Yeah.
Yeah. Yeah. Take the
and I will be looking at kind of the other things. But again, historically, if you look at how altcoins perform in a cycle, the ones that run hardest the first are the ones that continue to run. So you're almost, historically speaking, you were always better to wait to see what narrative developed. Yeah. Let the horse out of the gate a bit and then jump on it.
Makes sense. Makes sense.
And that's not to disrespect all the research that people like Shizzy and Niblis and yourselves do. But I'm going, if you're just looking at it from the point of view of making money, yeah.
We're canceling the show.
Better off not actually researching anything other than the price.
This will be our last show.
No.
Niblet says, when looking at these charts, are you just reacting to numbers, or you're inferring what the numbers mean, including sentiment, human psyche, etc., and acting on that?
I've been trading for a long time. Okay, the charts tell me everything I need to know. Yeah. And I would say that everything is baked into that, and that chart patterns, which a lot of people say TA is meaningless, and I go, yeah, no, you're just wrong. Yeah, I mean, it's something like Bitcoin is so technically compliant, it's frightening. Yeah. It's actually, if you can be good at TA, it's an ATM. Yeah, you can just use it to withdraw money. Yeah,
it's awesome.
And when you combine that with a few other indicators, and again, people over indicator, people have this tendency to have 5,000. I mean, you look at my charts, I really don't keep much on them.
Right.
And I do actually make some money in this game. So again, I think that chart patterns are things that people shun, and they replace with sentiment and all of this. I go, look, that's all baked into the chart. Yeah.
I was going to say, isn't that's where the TA analysis comes from anyway?
Yeah. I mean, TA is primarily geometrical. Yeah, and it's one of these things that in people find it difficult to understand how it works or why it works. And in a way, it doesn't matter. It does work.
Right.
Yeah.
Right.
It's more than good enough to generate profits. The further down coin market cap you go, the less and less.
Right. And the less and less they're going to stick with the rules.
Well, the more, I would say the more and more manipulated they are, because the lower the market cap, the easier for traders. And that doesn't mean the team or anybody. I'm not saying that. Traders, yeah. People go, hey, that thing's, for 5 million, I can move at 10% and make 20. Yeah.
Right.
So, the lower liquidity, the lower the market cap, the more prone to whale games it is. It's kind of only really Bitcoin and Ethereum that there's such liquidity, and it takes so much money to move them that you get very few unpredictable moves.
Yeah.
Right, that are not technically compliant. Once you go down the food chain, and again, this is I'm not saying anything about any project at all, but I'm just saying it's the nature of trading that if somebody can cause something to happen for 5 million and make a 10 million profit, they will. With 5 million, you're not going to tick Bitcoin. Yeah.
Yeah, absolutely. No, and look, and you're more impacted things by cascading liquidations on the lower end and all of those other things where people are leveraged up. So it makes sense. You were going to talk a little bit about how you're picking your shorts, or how you're finding those.
Yeah, and again, it's primarily technical. Yeah, so I would, again, sorry, let me clear all this junk off here. Yeah, so again, I'm just looking for areas of, people don't like technical analysis, and I go, maybe you should. So, one of the fundamental things of technical analysis is, hang on, let me delete all of this rubbish. There we go. Is concept of support resistance. Yeah.
Sure.
Or the left-hand side of the chart. Okay. As we call it. Okay. So there's some fairly obvious things that when you look at a chart, that prices that have had significance in the past remain to have significance. So this was an initial support position. It was tested. It was tested. It was tested. It was tested so many times it was going to break. Yeah.
Right.
But why did it go to this price? Well, it went to this price because, again, this is technical support and resistance. Yeah.
Right.
So what you're looking for in support and resistance is something that's tested on the way up. Again, go to weeklies, is broken through and tested on the way down. We can now say this is a significant price.
Right.
Yeah. So if the price comes down here, it's almost certainly at least going to bounce.
Yep.
Yeah. So again, these are really, really simple technical tools, but incredibly useful. People always say to me, well, why did we stop at 13.8 here? And I'd say, do you want to know? It's completely simple why we stopped at 13.8 during that bull run. Okay. Simply because it was the monthly all-time high to the dollar. So again, this is what I'm talking about. By starting with higher time frames, okay, all of a sudden, and again, why it makes no sense for us to bottom here. If we bottom, it'll be this magic 13.8 number. Yeah.
Right.
So
makes sense.
A few simple tricks like that. Again, looking for things that are support and resistance. So again, what you could argue here, I've been calling 13.8, by the way, since here. Okay. Right. That's not to say. And the reason being, I like this, where we got a test, a breakthrough, and a retest. Here we got a test, a breakthrough, and we're going to get a retest. That's an area of significant interest to me, okay, to start looking at accumulating.
Yeah, makes sense.
So again, none of this is...
So for shorts, you're looking for the resistance lines to play that.
Yeah. Support resistance, but start at monthly, yeah, and zoom out. And you'd be surprised at how confluent, like, why did we bottom here? Yeah, that's pretty fucking obvious.
Yeah.
And the reason is because higher time frame traders, money flows on these signals. If you want an understanding of why this happens, it's actually because it causes money to flow. So when we topped here at 13.8, okay, the kind of pro traders, again, the full-time traders, they're not looking at wicks. Yeah? They're looking at monthly closes. And they're going, okay, this is a yearly close, a monthly close, and a quarterly close. That was an important price. Yeah. The price is not going to be ignored on the way up.
Right.
Yeah.
Right.
The second time it tested it, it went through. Yeah. So, response, rejection, retest, up. Now we're going to test it again, in my opinion. Yeah.
Yeah. Makes sense.
So technical trading, as much as people, hey, Nicola.
He says,
I would say for my own personal view on longing the market is that I would not long at anything other than spot. Several reasons for that. The first reason, and the most obvious reason, is that if you're longing a perp contract into a bull run, you're going to get gang raped by fees. Yeah, because as price goes up, remember, fees always favor the shorts, or offset to the shorts. You're just going to give back so much of your profit, and I wouldn't have a leveraged long-term trade. So I would say spot on a ledger, let it run. Yeah, I mean, what's it take you to get off a ledger? 30 minutes, half an hour? It's not a rush. Yeah,
right.
No, particularly when we're talking about trying to get out, over months time frames, rather than that. In terms of, again, Brad, picking spots, it's fairly simple. You're looking at monthly closes, you're looking at momentum, you're looking at rejection candles, and you're looking high time frame.
Yeah, makes sense.
Just so everybody, weekly, down daily, and then down into the kind of, I remember the further you go down in time frame, the more random the price movement. Okay, right. The higher the time frame, the far easier it is to actually see the picture.
Yeah, see the patterns. Yeah. For everybody listening on the podcast later, Nicola had asked, wouldn't using cross leverage be a better strategy than DCAing your longs while getting a higher entry price? He said, assuming you start at the bottom or close to it. So that's what Shaun was just responding to.
Yeah, I wouldn't hold a even if the position is unleveraged, i.e. it's a sub-spot perp trade, okay, you're going to pay funding. Now, you can use futures trades, but futures trades, will have a 3 or 6, 12-month expiry. I just prefer to go, look, I'm going to buy my spot bags of whatever. I'm in Bitcoin, so, I'll buy some shitcoinery spot bags, over 100, 150 days. I'll stick them on a ledger, and then I'll start worrying about them in 6 to 12 months.
Right.
And I would imagine that they'll have done okay. I will start then to look at, and again, with Bitcoin, I'll be, my definition of what I do at the bottom with Bitcoin is I'll start to close out my shorts. Yeah. But I'm long already.
Right.
So I don't need to switch long. I'm always in Bitcoins. When I close my shorts, it's just more Bitcoin. And then I'll basically look to start, where am I going to short the next bull run since I'm long.
Right. Yeah. Right.
But again, that's simply, but again, I would say to people that this time is different. I think that, and I'm saying this without trying to sound like a maxi, I think you would, no, I mean this seriously. I think you might be very well advised to look at a longer term accumulation hold of Bitcoin this cycle.
Yeah, makes sense. Makes total sense.
Because again, if my wave count is right, this is, once we bottom here, this is probably a 10-year hold. Yeah. Again, that doesn't mean that you can't trade against it. And again, one people say to me, "Oh my God, but trust me, I'm trading against those positions, every day." Yeah. Every single day I'm trading against them.
Roberta says, for opening shorts in order to take profit, what are you doing when we are in price discovery area so that we don't have candles of the past?
You can do fairly simple things like fib extensions are always good. Yeah. So again, to get into some kind of technical mumbo jumbo that most people would just fucking hate. But if I take a fib extension here from here to here, let me just set this up. Sorry if you can't see it. So let's just add in some 168s and 268s. And surprisingly, we topped exactly at the 168 fib extension.
Right.
So for price discovery, again, starting with big long monthly candles, look at the significant last down move, which wasn't this, and you'll find that actually we topped at the 618 fib extension, the 1618 fib extension.
Very nice.
Yeah.
Very nice.
And again, that and also just to say, like, I have no problem. But because of the way I will be entering a short, I have no problem building a short all the way up here, because of the way I will do it is add, take out the add, and I will be constantly looking to manage my short average entry moving up with price. Yeah. So then even if I fall asleep or have a boating accident, okay, I have a short near the top and I have a long near the bottom, everything is trapped. Yeah. All my profit, price can go anywhere at once and my profit is locked.
That's beautiful.
So yeah, during these kind of runs, I'm always throwing a little bit of short at it. Yeah? Just always, why not? And what I'm really about doing is to, and again, a different way to think about this is I'm just going to look, my average entry for shorts here, I'm trading to bring my average entry for short up with the bull run. Yeah, that's all. Yeah, because if I'm long here and I'm short here, this retained profit is going nowhere in the event of something like this. But also, I will look then to take profit on this, keeping my long from here, take profit on this, and then let it run up again, rinse and repeat. Yeah. So, yeah, I mean, I'm probably making it sound simpler than it is, but it's not as complicated. No, but it's not as complicated as people think it is. Yeah.
Yeah.
I mean, there's some really obvious signs that even if you miss getting out here, which was technically the correct place to get out, I know that sounds funny when we went higher. As soon as we faked this out, yeah, like you should be gone.
Yeah.
As soon as we did what they call a swing fail pattern, as in we faked this out. Like, super cycle my bollocks. The only way we were going was down to hell. Yeah.
Well, and it's interesting how desperately people want to hang on to that vision every time they're up, that it's going to go further, and they're scared to death to get out.
And the same applies here, by the way, Brad. I mean, people get stuck in narratives. Yeah.
Yeah.
Because the narratives have worked and made them money for so long, and we're human. Our brains, love to just rinse and repeat all the time. Yeah.
Sure.
Okay. There's equally a danger that bears like me get caught in this narrative. Yeah.
Right.
Yeah. And any up movement, we're going, it's not the bottom. Yeah. Well, nothing is guaranteed, but we can at least see these kind of, a classic indicator, again, at very high time frames, of these kind of double taps. Yeah.
Yeah.
Okay. You can even see it at the top here in 2017 at weekly, where we went up, after the initial crash. We went back up and tested, and the market just said no. Again, this is time to be gone from this market. Yeah.
Right.
Same here. We went up, got rejected. We got into the range, and then the only way was up. Okay. So again, lots and lots of difference. You can see it here again. We tried, we retried, we failed. Get out. Just get out.
Yep.
It's over. I would technically say the bear market started here, and that this is just a bear market rally.
Roberta says, on the way up and you have open shorts, are you also closing them when you think the retracement is done, or do you keep them open until the end of the cycle?
Okay, so again, for my longer term shorts, Robertus, what I will be doing is, I'll have a short and the market runs away from me. I'm okay with that. I will seriously, aggressively DCA it to bring the average back, the average entry upward price, and then I'll take out my DCA money. So if I want $100 short in the market, and we run up and we get to an area like this, I will simply go, okay, cool. For this length of trade, yeah, cool. I'll move that from $100 to 500. My average entry is dragged all the way up, and I'll take out my 400. So my $100 that was short here is now short here. Yeah.
Yeah.
And then when I start to see this, I will start to add to the $100 because I reckon, okay, it's there. But I would always keep it. Yeah, I would always keep something there, primarily because I get just paid a shit ton of funding for being short in this last bull run. It was a 38% return in funding just for holding a short.
Damn.
Yeah.
Damn.
And again, I know they're not, Celsius numbers or whatever, or maybe they are, I don't know. But I mean, people got, but like, I'm cool with
That's double Terra numbers, dude.
Is it? Okay. Maybe it all is a Ponzi then. But again, so I in these lenses, when I'm trading smaller time frames, it's very different. But I think as we hopefully come towards the bottom here, what I would, my major advice to people is just zoom out. Yeah. Don't get caught up in it. And don't, if there's a knife catch to be had, I think you'll know about it. There'll be some global news. It's not going to be just a crypto related thing. Yeah. It's not going to be like 3AC. Nobody cares. If there's this type of an event, that will cause the Fed and others to start printing, just go all in long. Yeah. Okay. Yeah. But they're incredibly rare. In fact, in the history of Bitcoin, that is the only one. The rest of them, you've got so much time. So I would just say, again, there's a really good thing to go spot long on 150 day purchase. Okay. Ignoring the kind of micro movements of the price. And the way to ignore the micro movements of the price is to look at monthly candles.
Yeah, makes sense.
Because you begin to see how irrelevant that 10% here, 5% there actually makes in terms of what you're trying to achieve.
Absolutely. What's your proportional for you? The quantity of the ratio of long and shorter time frame trading that you do? in terms of the,
I mean, I'm maximum. The maximum short I've ever been is this cycle, which is 30% of my stack.
Okay.
Yeah, and that is simply because I will not put more than 30% of my stack onto a centralized exchange.
Right.
Yeah, because as much as I trust in relative terms my trading venue,
right.
I'm not that interested in losing it all.
Yeah. Makes sense.
And it happens. And again, I got caught this cycle as well by SBF and so on. And that happens. I got caught last cycle by Craptopia. And, it just happens. Yeah.
Sure.
Sure. So that's okay. But again, from my position, I'm not trading dollars. I'm only ever trading Bitcoin. And I would never have more than 30% of my stack on exchange. And again, I think I said this before, but really recommend people do this in my kind of lower time frame scalping stuff. I will take a percentage of every week's profit and put it into my own on ledger insurance fund, so that when I do lose money to an exchange, I've got more than that already put away as still my exchange stack.
Yeah. Makes sense.
So again, hopefully this time is different, but it's not going to be. We'll have another SBF. That shit just happens every cycle. Yeah, I mean, what did we have last cycle? Quadriga, Cryptopia. Yeah. I can't even.
Yeah, there's always some.
Yeah, there's always somebody. Yeah, and
always.
And there you go.
Shaun, that's fantastic, man. Those were great lessons for everybody. Really appreciate you doing it yet again.
Dude, and again, apologies about yesterday, but
no need.
There you go.
Family first.
The only thing I'd say to people is, like, seriously, try looking at monthly charts and ignore the noise if you're going to take longer. If you're buying your 10 for the year, which I saw you guys talking about, which again is a cool idea. Yeah, maybe T-wrapping that isn't a bad idea. And
I like that.
Just look at the monthly candles.
Yeah. That's fantastic. That's a great idea, man. That's a really good idea. We posted your top 10 yesterday.
I saw that, and it was 100% accurate. No, I was thinking about it. Right? Like, I'm gonna pick Cantos just because you guys talk about it.
Yeah,
I presume you know what the fuck you're talking about.
Good luck with that.
I am joking, by the way. I know you know what you're talking about. I kind of like the name of it. I'm definitely going to take some Sol. And then on the others, I'm just going to wait to see what runs.
Yeah, I agree.
Good man. Somebody stepping up to be SPF.
Roberta says, awesome show. Thank you very much. Euphoric says, I'll be the next SPF if I can also get the mansion and drug-fueled orgies.
Not for very long.
Shizzy said, just a plug, but if anyone wants to hear Shaun and Joe's life story, I'm going to have them on my show Sunday. Brad, got to get you next. That sounds great, man. I will be listening in.
This is the first I've heard about my life story. What the fuck? I would suggest if it's my life story, and you're recorded for later insomnia use,
That's great. Well, Shaun, thanks so much, man. I appreciate it. Everybody, thank you for participating. Shizzy, Euphoric, Robertus, Nicola, Niblets, Ed, thanks for joining us today. James, I think I covered everybody. Chuck, really appreciate you guys being here. Love your participation, and it helps a lot to help things move along. If you're listening to us on Apple Podcasts or Spotify, please rate and review us. If you're listening on YouTube, please click the thumbs up and make sure you subscribe and click the alert button. Joe's joining us from the road, all bundled up there in the cold parts of the United States. Shizzy says, great show, guys. Thank you guys. Have a great weekend. Appreciate everybody joining us. Take care, everybody.
Take it easy. Cheers.
Thanks, man. Have a good one.
Thanks, guys. All right.
Bye-bye.
Cheers. Bye-bye.
Bye.